When it comes to building wealth, real estate investing has long been hailed as a surefire way to make your money work for you. The allure of buying properties with just a small down payment, watching them appreciate in value, and reaping the benefits of passive rental income while you travel the world is enough to make anyone consider jumping into the real estate game. But before you dive headfirst into this, it's essential to acknowledge the uncomfortable truths about real estate investing. Spoiler alert, it's not all sunshine and rainbows. The substantial capital required for real estate investments extends far beyond the sticker price of a property. First and foremost, there's the down payment. When you're buying a residential property, especially if you're looking for favorable mortgage terms, you'll typically need a down payment of at least 20% of the property's purchase price. Depending on your target property's value and location, this down payment can amount to a substantial sum. For instance, in hot real estate markets where property values soar, the required down payment can feel like a mountain to climb. This significant upfront expense can pose a formidable barrier for smaller investors, making it a challenge to enter the real estate game, especially when competing with deep-pocketed investors. It's worth noting that while the 20% figure is a general guideline, there are creative strategies and financing options to circumvent the large down payment requirement. However, these alternatives may come with their own set of terms, risk, or higher costs, so they're not always a straightforward solution. But that's just the tip of the iceberg. When you're in the real estate game, you're also committing to ongoing financial obligations. There are closing costs, which include fees for title searches, appraisals, and legal services. Also needed are funds for repairs and funds to float the property until it's fully rented. These costs can add up quickly and further strain your initial investment. If 20% is needed for the down payment, the total capital requirement is going to be much more than that, and calculating this incorrectly will be disastrous. Once you've sunk your cash into a property, it's not like you can just pull it out whenever you want. Real estate is the long-term relationship of investments. It means that if you're in a pinch and require quick access to your funds for an emergency or another promising investment opportunity, real estate might not be your go-to source. Your cash is locked up in bricks and mortar, and extracting it swiftly isn't always feasible. Accessing the equity via a bank loan can be a long, painstaking process, and the cash flow is required to back it up, and still, there are no guarantees. Selling a property takes time, and in some cases, it can be painfully slow, often taking weeks and weeks or even a matter of months. Even in a hot real estate market where properties seem to be flying off the shelves, you'll find that it's not as simple as posting a for sale sign and watching the offers roll in. It entails a series of steps, from listing your property to finding a buyer, negotiating a price, conducting inspections, and closing the deal, which has the possibility of falling apart until everyone signs on the dotted line. If you need quick access to your dough for an emergency or another investment opportunity, you might just be out of luck. Property management is often glossed over as if it won't be a huge drag when discussing real estate investing, but it can be a substantial burden. Being a landlord means dealing with tenant issues, which can range from late rent payments to maintenance requests to more severe problems like evictions. Finding reliable tenants and ensuring they treat your property with care can be a constant challenge. Property maintenance can also be costly and time-consuming, especially when unexpected repairs arise. For those who invest in properties across different geographic locations, managing these assets becomes even more demanding. Additionally, dealing with difficult tenants can be emotionally draining and financially costly. Legal battles over issues like lease violations or property damage can consume time and resources. It is possible to implement systems and strategies to handle these tasks and issues, but the reality is that most landlords will not successfully do so, resulting in burnout and ultimately a lack of profitability. It's true, real estate tends to be less volatile than the stock market, experiencing slower and steadier price movements over time. Property values typically appreciate gradually, influenced by factors like location, economic conditions, and supply and demand. While real estate historically appreciates over the long term, it doesn't mean it's immune to downturns. Property price swings are usually location-specific, meaning certain states and cities might see large downturns, while other areas will see growth, so it's not as clear-cut as buying wherever you feel like it. During economic recessions or housing market crashes, property values can plummet, leaving investors with properties that are worth less than their initial investments. These market fluctuations can disrupt your financial plans and jeopardize your returns, in addition to your down payment and credit. Leveraging or using borrowed money to finance real estate investments can amplify your returns when property values increase. The use of leverage is a huge talking point when it comes to reasons to invest in real estate. You can control large amounts of real estate with relatively small down payments. It seems like a win, right? Well, leverage also magnifies your losses if the market takes a downturn. Let's say you put $100,000 down on a $500,000 property. If the property appreciates 10%, you've gained $50,000 in equity, or a 50% return on your down payment. Alternatively, if the property goes down in value by 10%, you've lost $50,000 of your $100,000 down payment. And if the rental income generated by your property doesn't cover your mortgage payments and other expenses, you might find yourself in a precarious financial position, struggling to meet your obligations. Moreover, over-leveraging can limit your financial flexibility, making it challenging to seize other investment opportunities or respond to unexpected financial setbacks. Real estate investing isn't just about scoring the perfect property and watching the money roll in. It's also about diving into a world of rules and regulations that can make your head spin. And what makes it even trickier is that these rules can vary big time from one place to another. Zoning laws are like the referees of real estate. They decide what you can and can't do with your property. Try to turn your cozy cottage into a nightclub in a residential zone, and you might find yourself facing penalties. Depending on where your property is, there are all these rules about how you can treat your tenants. Things like how much you can raise the rent, how you can kick someone out if they're being a nightmare neighbor, and how fast you need to fix that leaky faucet. Furthermore, legal fees can be a silent profit killer. If you mess up and find yourself tangled in a legal mess, those lawyer bills can chomp away at your hard-earned cash faster than you can say lawsuit. Failing to make yourself aware of these ins and outs can turn that golden opportunity into a costly headache. In some regions, real estate markets become oversaturated due to high demand or speculative investing. This can drive property prices to unsustainable levels, leading to a bubble. It's like everyone suddenly decides they want to get into real estate, and property prices start soaring faster than a rocket to the moon, leading to an even larger bubble because investors see all of the money being made and view it as a golden ticket. If you purchase properties during such times, you might end up overpaying, making it challenging to achieve a satisfactory return on investment. That's a formula for frustration because it can be tough to see a decent return on your investment when you start out in the red. Moreover, fierce competition for desirable properties can lead to bidding wars, which not only drive up prices, but also reduce your chances of securing profitable investments. Then you're presented with the question of, will this continue or are we headed for a downturn? Despite these major downsides, it's crucial to remember that real estate investing has the potential to be a profitable venture when done wisely. However, it's equally important to approach it with your eyes wide open, fully aware of the potential pitfalls and challenges that lie ahead. Before you embark on your real estate investing journey, do your homework, seek advice from experienced investors, and carefully evaluate your risk tolerance and financial situation.